Welcome to Money Moves for CRNAs, the podcast created specifically for 1099 CRNAs who want clarity, confidence, and control over their money. This podcast is for educational purposes only and is not personalized tax or financial advice. Here's your host, Randy Larkin, CPA with Atlanta Tax Planner.
Hi, this is Randy Larkin. If you're a 1099 CRNA and you're making good money, but your tax bill keeps getting bigger, this episode is for you. As a 1099, you're not just a provider, you're a business. In the last episode, we talked about why that matters and why having an LLC is such an important foundation for CRNAs. Today, we're building on that. Because once you understand that you're a business, the next question is, how is that business taxed? And do you have any control over it? This episode is all about LLC tax flexibility, what it really means for CRNAs, when it starts to matter, and how the right setup can save you thousands of dollars as your income grows. And just like always, we're keeping this simple, practical, and clear. No tax jargon, no scare tactics. Let's start with the big question. What does tax flexibility actually mean for a 1099 CRNA? One of the biggest advantages of having an LLC is something called tax flexibility. That just means you get options. And options are powerful when it comes to taxes. Most people think that once they set up a business, the tax setup is locked in forever. But with an LLC, that's not true. An LLC gives you more tax choices than almost any other business structure. Let's start with how LLCs are taxed by default. If you are a single-member LLC, meaning you're the only owner, the IRS treats you like a sole proprietor. Your business income goes right into your personal tax return using Schedule C. It's simple, easy, and works well when your income is lower or when you're just getting started. If your LLC has more than one owner, the IRS treats it like a partnership. The business files its own return, and each owner gets a K-1 that shows their share of the profit. That profit then flows to your personal return. These default options are fine at the beginning. But here's where things get interesting. An LLC does not stop there. You can choose to change how your LLC is taxed as your income grows. That's where the real flexibility comes in. One option is to elect to be taxed as an S corporation. This is a big deal for many 1099 CRNAs. With an S corp, you wear two hats. You're the owner, and you're also an employee. That means you pay yourself a reasonable salary. That salary is subject to payroll taxes, just like a regular paycheck. But here's the key part. Any extra profit after that salary can be taken as a distribution. Distributions are not hit with self-employment tax. So instead of paying self-employment tax on every dollar, you only pay it on your salary. As your income increases, that difference can mean thousands of dollars in tax savings each year. Another option is to elect to be taxed as a C corporation. This is less common for solo CRNAs, but it can make sense in certain situations. In a C corp, the business pays its own taxes. This setup can be helpful if you want strong fringe benefits, or plan to reinvest profits instead of taking them all out. Now here's the part most people miss. You're not stuck with one choice forever. An LLC lets you start simple and change later. You can begin as a sole proprietor when income is low. Then, as profits grow, you can switch to an S corp. If your goals change again, your tax strategy can change too, as long as you follow IRS rules. This matters because your business will not stay the same. Income goes up, Life changes, goals shift. The structure that works this year might not be the best one 3 years from now. Tax flexibility means your business can grow without forcing you into a bad tax situation. That's why an LLC is such a powerful tool. It gives you control. It gives you choices. And when used correctly, it helps you keep more of the money you work so hard to earn. If this episode helped things feel a little clearer, that's the goal. You don't need to change anything today, and you don't need to rush into decisions. What matters is understanding that as a 1099 CRNA, you have options, and those options grow as your income grows. An LLC doesn't lower taxes by itself, but it gives you the flexibility to plan smart and avoid surprises later. In the next episode, we're going to talk about risks many CRNAs don't see coming, and why real protection is about preparation, not fear. I'll see you there.
Thanks for listening to Money Moves for CRNAs. New episodes drop twice a month. See you soon. Music licensed from premiumbeat.com. Under license number 7394047.